Hello, and welcome to Trestlebridge Capital's monthly market and economic recap. Before we begin, here's a quick note from our legal team. Today's discussion is hosted by Eric Jefferson, managing partner of Trestlebridge Capital, as he breaks down this month's key market updates. Let's get started.
Welcome to the Trestlebridge Capital Market and Economic Recap for August 2025. Most of the month felt like late summer. It was relatively quiet up until the last day. We'll discuss the recent court decision upending some of the reciprocal tariffs, what those implications will be on markets going forward. And we also dive into a little more detail on that topic on this month's client letter released later today. As I mentioned, for a majority of the month, stocks slowly drifted higher, bringing year-to-date gains back into double digits, just over 10%. Interestingly enough, though, did have much greater breadth or leadership, value outperforming growth, small caps, which had been all but forgotten about, recording a 8+% return on the month. Again, both of those have been sharp contrasts to the themes that we've seen played out earlier in the year. Obviously, that does speak to the benefit of taking a diversified approach. On the economic front, Q2 GDP data, that's a measure of the total U.S. economy, that was revised higher, reinforcing a stable but slowing expansion. At the same time, inflation did continue to remain stubbornly high above target. That in turn prompted the Fed to halt any potential interest rate cuts. However, in a speech at Jackson Hole later in the month, Fed Chairman Jerome Powell did indicate an increased willingness to cut in the September cycle, something we'll obviously continue to be watching very closely. Now, as I mentioned, fairly quiet month leading up to the last day. The U.S. Court of Appeals ruled the administration's use of reciprocal tariffs exceeded its authority. Next, this case will go to the Supreme Court. Tariffs will remain in place for the time being. Now, markets certainly don't like uncertainty. We saw that reflected in the price action on Tuesday following Labor Day weekend, where they did open sharply lower, did claw back some of those recent declines. As a result, though, not sure this is the market event. A lot of people anticipate that it will. At the end of the day, I think this will take a long time to play out before we have any resolution. Obviously, tariffs are a very big focus for this administration. Who's to say President Trump wouldn't explore other alternatives down the road if these appeals were upheld? Furthermore, if they were overturned, two big potential implications. One would be what happens to those next order of trade agreements with some of our largest partners, particularly the India and Chinas of the world that have publicly taken a less cooperative view towards the United States. Lastly, and probably most important to think about the potential outcomes and implications, would be if the U.S. has to return the $159 billion they've received in tariff revenue, as well as losing that future income stream. What happens to their borrowing needs? How does that money ultimately get created? If that's going out and issuing more debt, what implications will that ultimately have on interest rates? And that was one move we did see reflected in the bond market. That's all for this month. As always, I appreciate you taking the time to join us. Please don't hesitate to reach out with any questions or comments. Thanks again.